Ladies and gentlemen, today let's talk about a subject that affects every single one of us, yet so few truly master the art of financial management. Now, I'm not talking about money as just numbers or figures on a bank statement. I'm talking about the financial choices that shape your lifestyle, your future, and ultimately your legacy. When it comes to finances, one thing is clear: it's not what you make that counts, it's what you keep, and more importantly, how you use it. You see, financial success is less about income and more about discipline, priorities, and choices. You could earn $1 million a year, but without discipline and strategy, you could still be broke. Money has a way of slipping through the fingers of those who don't respect it. And yet, those who know the art of managing it, even on a modest income, build themselves a solid foundation. The first rule in the art of financial management is simple: live below your means. It's not glamorous, but it is powerful. Too often, we fall into the trap of trying to impress others, spending what we don't have to buy things we don't need. But there is freedom in simplicity. Living below your means allows you to keep more of what you earn, to save, and to invest in the future. Now, let's talk about savings. Savings are the seed of every great financial journey. Some people spend every penny they earn, hoping to save someday, but here's the truth: someday is not a day on the calendar. Financial security comes to those who understand the principle of saving a portion of every paycheck, no matter how small. It's the habit, not the amount, that counts. When you save, you're planting a seed. And with patience and consistency, that seed grows. Once you've saved, the next step in the art of financial management is to invest. Investing is how you put your money to work for you. But don't gamble, invest with wisdom. Learn the markets, study opportunities, and make informed decisions. Investing is an art because it requires discernment, patience, and sometimes a bit of courage. It's about building a bridge to your future, one that provides not just for today but also for tomorrow. And speaking of tomorrow, let's talk about planning for the long term. Financial management is about vision. It's about where you want to be 5, 10, 20 years from now. If you don't know where you're going, any road will get you there. But if you set clear financial goals, each decision you make today will bring you one step closer. Visualize your financial future, and then make choices today that align with that vision. Finally, let's talk about generosity. True financial mastery isn't just about getting, it's also about giving. Financial success allows you to contribute, to make an impact. When you manage your money well, you're in a position to help others, whether it's through supporting your family, donating to a cause, or even mentoring someone starting on their journey. So remember, the art of financial management isn't about luck. It's about choices, discipline, and vision. Make decisions that honor your goals, practice the habit of saving, invest wisely, and keep your eyes on the horizon. With these principles, you'll create not just financial stability but financial mastery. And that is the art worth mastering. Living below your means is one of the simplest yet most powerful principles of financial wisdom. This concept, though seemingly straightforward, carries the potential to transform lives, build wealth, and offer a path to true financial freedom. Living below your means means making intentional choices to spend less than you earn, regardless of your income level. It's not about deprivation or penny pinching, but rather about conscious, value-based decision-making that leads to long-term financial stability and a greater sense of peace. When we understand the full impact of living below our means, we realize it's a foundation upon which we can build not only wealth but also a life of purpose and balance. The idea behind living below your means begins with a fundamental mindset shift. We live in a culture that constantly encourages us to want more, to buy more, to upgrade, and to impress. This desire for more is deeply ingrained and is often fueled by advertising, social media, and societal pressures. It's easy to fall into a cycle where we equate happiness with material possessions or experiences. We feel the urge to keep up with the latest trends, gadgets, and luxuries, often believing that they will bring us closer to satisfaction. However, real contentment comes not from accumulating more but from learning to appreciate and make the most of what we already have. When we choose to live below our means, we resist this external pressure, allowing ourselves to focus on what truly matters and aligning our spending with our actual needs and values. Choosing to live below your means brings a unique kind of freedom. When you aren't constantly chasing the latest status symbol or the next big thing, you free up a significant amount of mental and emotional energy. Instead of worrying about how to pay off debts, how to cover unexpected expenses, or how to finance a lifestyle, you gain a sense of control and stability. This mental shift can lead to a life where money serves you rather than the other way around. Living below your means lets you breathe a little easier, knowing that you're not overextending yourself financially and that you have a cushion for whatever life may bring. Another benefit of living below your means is the capacity to save and invest consistently. When you spend less than you earn, you have a surplus money that can be set aside for future needs, emergencies, and opportunities. Financial stability isn't just about handling day-to-day expenses, but also about preparing for the unknown. Life is full of surprises. Unexpected medical expenses, home repairs, job losses, or other emergencies can hit at any time. Those who live paycheck to paycheck, spending everything they earn or more, find themselves vulnerable in these situations. On the other hand, people who live below their means are prepared, giving them a significant advantage. They have the peace of mind that comes from knowing they can handle unforeseen expenses without going into debt. Beyond emergency savings, living below your means also allows you to invest. Investing is one of the most effective ways to build wealth over time, as it enables your money to grow through compound interest and smart asset allocation. Consistently setting aside a portion of your income to invest can lead to financial independence, as your money works for you and provides returns that contribute to long-term wealth. Living below your means also fosters a mindset of gratitude and contentment. When we consciously choose to avoid unnecessary spending, we start to see the value in simplicity and moderation. This is not to say that one should never enjoy life's pleasures, but rather that they should be enjoyed with intention. When we learn to appreciate what we have, rather than constantly desiring more, we develop a sense of fulfillment that isn't dependent on material possessions or external validation. This shift can improve our mental and emotional well-being, as we learn to derive happiness from non-material sources, such as relationships, personal growth, and meaningful experiences. Additionally, this approach teaches us the difference between needs and wants. It's easy to blur the line between what we need and what we want, especially in a consumer-driven society. But by living below our means, we become more conscious of our spending choices, asking ourselves whether each purchase truly adds value to our lives or is simply a fleeting desire. Another crucial aspect of living below your means is that it allows you to build a buffer against life's uncertainties. By saving consistently and avoiding lifestyle inflation, you create a financial safety net. This buffer doesn't just serve in emergencies, it also gives you flexibility and choices. For instance, if you're unhappy at your job, having a savings cushion allows you the option to leave and find a better opportunity without being trapped by financial constraints. It also gives you the option to pursue a passion, take a sabbatical, or invest in education. When you're not living paycheck to paycheck, you gain the freedom to make choices based on what's best for you, rather than feeling pressured to stay in less than ideal situations out of financial necessity. This flexibility is incredibly empowering and can lead to a more fulfilling, balanced life. Living below your means doesn't mean depriving yourself of enjoyment. It's about aligning your spending with your values and prioritizing what truly matters. Many people find that when they cut back on spending in areas that don't bring them real happiness, they actually have more resources to put towards the things that do. For instance, you might decide to forego expensive coffee runs or impulse buys so that you can afford a meaningful vacation, take a course, or invest in a hobby. When you make choices that reflect your priorities, you can enjoy life's pleasures more fully, knowing they're within your financial means. One of the most powerful effects of living below your means is that it can reduce financial stress. Money problems are a common source of anxiety, often affecting our relationships, mental health, and overall quality of life. Living beyond one's means often results in debt, which brings its own set of challenges. Debt limits options, as a portion of income must go toward repayments instead of being available for other uses. However, when we live below our means, we avoid the trap of debt. Or if we already have debt, we can focus on paying it down and eventually freeing ourselves from it. As our financial obligations decrease, so does our stress. We sleep better, feel more secure, and are better equipped to handle whatever life throws at us. Living below your means also cultivates self-discipline, a skill that has positive effects beyond finances. When you practice restraint and make thoughtful financial choices, you build the habit of self-control. This discipline can extend to other areas of life such as health, work, and relationships. Financial discipline encourages patience and long-term thinking, teaching us to delay gratification for the sake of a greater goal. This mindset is invaluable, as it helps us focus on what truly matters and avoid impulsive decisions that may not serve our best interests. When we live below our means, we not only improve our financial situation but also set a powerful example for others, especially our children, friends, and community. Financial habits are often learned behaviors, and by demonstrating prudent financial choices, we can inspire others to follow suit. This impact is especially important in families, as children who grow up seeing responsible money management are more likely to adopt these habits themselves. In this way, the practice of living below our means has a ripple effect, contributing to the financial well-being of future generations. Choosing to live below your means requires intentionality, awareness, and sometimes a willingness to stand apart from the crowd. It may mean saying no to certain purchases, social events, or status symbols. However, this short-term discomfort is a small price to pay for long-term peace of mind and financial independence. By keeping our spending in check, we protect ourselves from the dangers of lifestyle inflation. As people earn more, they often feel tempted to upgrade their lifestyle to match their income. This pattern, known as lifestyle creep, keeps people in a cycle of spending without ever truly getting ahead financially. Living below your means breaks this cycle. Ultimately, living below your means is an investment in your future. It's a practice that yields returns not only in terms of financial security but also in terms of personal growth, peace, and freedom. The choice to live below your means is a commitment to long-term success over short-term gratification. It's about understanding that wealth isn't measured by how much you spend but by how wisely you manage what you have. By embracing this principle, you pave the way for a future where money becomes a tool that serves your goals and dreams, rather than a source of worry or constraint. Saving money is often overlooked in the fast-paced, consumer-driven culture that defines much of modern society. With the appeal of instant gratification and the omnipresence of marketing, it's easy to see why people might prioritize spending over saving. However, the act of saving is a powerful practice that extends far beyond accumulating wealth. It provides security, fosters resilience, enables future opportunities, and serves as a tool for personal empowerment. When done consistently, saving has the potential to transform lives, enabling individuals to achieve their dreams, plan for uncertainties, and ultimately gain a greater sense of control over their future. Saving money fundamentally stems from understanding the value of delayed gratification. In an age where everything from meals to fashion to entertainment can be delivered in an instant, patience is a skill in decline. However, saving inherently teaches the power of patience, reinforcing the idea that small sacrifices today can lead to much greater rewards in the future. This perspective reshapes how one approaches money and builds a mindset of sustainability. When someone saves rather than spends impulsively, they are not only preserving resources for the future but are also cultivating self-discipline, an essential trait for achieving any long-term goal. The delayed rewards that come from saving help develop the mindset that good things take time, instilling a sense of respect for resources and an understanding of the long-term benefits of planning ahead. One of the most immediate and impactful benefits of saving is financial security. Life is unpredictable, and financial setbacks are inevitable, whether it's a medical emergency, job loss, or unexpected home repairs. A savings cushion serves as a buffer against these events, ensuring that one can handle unforeseen expenses without plunging into debt or experiencing severe financial hardship. This emergency fund offers peace of mind, allowing individuals to navigate through crises with a sense of stability and resilience. The confidence that comes from having a safety net cannot be overstated, as it fosters a mindset where individuals feel equipped to face challenges rather than fearing them. The act of saving, therefore, is a proactive measure that builds resilience against the uncertainties of life. Saving also provides a foundation for making future investments, whether it's buying a home, starting a business, or pursuing higher education. Investments require capital, and saving is the most accessible means of generating that capital. When someone has savings set aside, they have the freedom to take calculated risks that could lead to substantial gains. For instance, someone who saves diligently can take advantage of a business opportunity when it arises without needing to rely on loans or external funding. In this way, saving enables individuals to create wealth over time and establish a degree of independence. Rather than relying solely on credit or other external resources, individuals who save can rely on their own resources to fund their aspirations. This financial independence is empowering, as it allows people to take control of their paths and make choices that align with their goals, rather than being limited by immediate financial constraints. Furthermore, saving cultivates a sense of financial freedom that few other practices can offer. Financial freedom is not about accumulating vast amounts of wealth, but about having the freedom to make choices without being constrained by financial worries. For some, this may mean the ability to retire early. For others, it could mean taking a sabbatical to travel, pursue passions, or spend time with family. Whatever form it takes, financial freedom is the result of consistently saving and making wise financial decisions. When people save, they are not just storing money, they are investing in their ability to make choices that bring them happiness and fulfillment. This freedom can lead to a higher quality of life, where one is not burdened by financial stress but can instead focus on what truly matters. The act of saving is also intrinsically tied to building wealth. Wealth is often perceived as an outcome of high income or successful investments, but it is saving that lays the groundwork for wealth accumulation. High earners who do not save often find themselves in financial trouble, while modest earners who save consistently can build significant wealth over time. By setting aside a portion of income regularly, individuals can grow their savings through interest in investments, capitalizing on the power of compounding. Compounding occurs when the interest earned on savings also begins to earn interest, leading to exponential growth over time. Thus, even small amounts saved consistently can grow substantially, underscoring the principle that wealth is not solely about how much one earns but about how much one saves and invests. Saving also imparts a valuable lesson in distinguishing between wants and needs, an essential skill for financial literacy. By prioritizing needs over wants, individuals can make informed decisions about their expenditures and avoid unnecessary debt. This skill becomes even more critical in a consumer society where credit cards and buy now pay later schemes make it easy to purchase items on impulse. When someone commits to saving, they become more mindful of their spending habits, often finding that many of their purchases are not essential. This mindful approach to spending can prevent people from falling into debt traps and help them achieve greater financial stability. Learning to differentiate between what is necessary and what is merely desirable is a skill that transcends finances, fostering a lifestyle focused on value and purpose rather than excess and waste. Saving also offers an avenue for setting and achieving financial goals, which is an empowering process in itself. Financial goals may range from short-term objectives, like saving for a vacation, to long-term aspirations, such as purchasing a home or planning for retirement. Saving provides a clear path to these goals, as it enables individuals to allocate resources toward their ambitions systematically. Each time a goal is reached, it reinforces the idea that discipline and planning pay off, boosting confidence and motivation. Achieving financial goals through saving is immensely rewarding, as it represents a tangible outcome of one's efforts and determination. The satisfaction of reaching a savings target serves as positive reinforcement, encouraging individuals to continue making wise financial decisions in the future. In addition to personal benefits, saving contributes positively to society. When individuals save, they contribute to the overall stability of the economy. Savings in banks are often used for loans that fund businesses, homes, educational opportunities. This circulation of money drives economic growth and enables more people to achieve financial success. On a larger scale, high levels of personal savings contribute to a nation's economic stability by reducing dependency on credit and decreasing the likelihood of financial crises. During times of economic downturn, those with savings are less likely to face severe hardship, which reduces the burden on social support systems. Thus, by saving, individuals are not only securing their own future but are also playing a role in fostering a more resilient and robust economy. Saving also strengthens relationships and builds a sense of community. Financial stress is a leading cause of tension in relationships, often leading to arguments and even separations. When individuals or families save together and prioritize financial planning, it fosters communication and shared responsibility, reducing the likelihood of conflict. Family members learn to work together towards common goals, which strengthens bonds and builds trust. Furthermore, savings can enable people to give back to their communities, whether through charitable donations or community projects. When individuals are financially secure, they are more likely to be in a position to help others, creating a ripple effect of generosity and support within their communities. This act of giving is rewarding in itself, as it fosters a sense of connection and purpose beyond individual gain. Saving is also a powerful tool for future generations. When parents save and invest wisely, they can provide a secure future for their children, whether by funding their education, providing a financial cushion, or leaving an inheritance. This transfer of wealth helps future generations achieve their goals without the burden of debt or financial hardship. By teaching children the importance of saving, parents can instill lifelong financial habits that empower the next generation to make wise financial choices. Saving, therefore, is not just an individual act but a legacy that can benefit families for years to come. Moreover, saving cultivates a mindset of abundance rather than scarcity. While it may seem counterintuitive, those who save often feel more abundant than those who spend impulsively. By setting aside money for the future, individuals feel secure and empowered, which fosters a sense of abundance. This mindset shift is transformative, as it replaces feelings of lack with feelings of contentment and gratitude. People who save are more likely to appreciate what they have, as they are not constantly seeking fulfillment through material possessions. This sense of contentment can lead to a happier, more fulfilling life, where one's sense of worth is not tied to spending but to the peace of mind that comes from financial security. Saving also enables individuals to weather financial storms and take advantage of opportunities when they arise. Economic downturns and recessions are inevitable, but those with savings are better equipped to handle these challenges without significant hardship. Having savings allows individuals to make strategic decisions during difficult times, such as investing in undervalued assets or taking advantage of career development opportunities. In essence, saving provides the flexibility to adapt to changing circumstances, ensuring that individuals are not forced into decisions driven by immediate financial needs. This adaptability is crucial in an unpredictable world, where the ability to pivot and make informed choices can mean the difference between hardship and stability. Finally, saving instills a sense of pride and accomplishment. There is a unique satisfaction that comes from watching one's savings grow, knowing that it is a result of personal effort, discipline, and foresight. Each deposit, no matter how small, represents a step towards financial independence and security. This sense of accomplishment boosts self-esteem and reinforces positive behaviors, motivating individuals to continue their saving habits. Saving becomes more than just a financial activity. It is a journey of self-improvement and growth, where individuals learn about their values, set priorities, and make choices that align with their goals. The power of saving lies in its ability to empower individuals, strengthen relationships, and foster a more resilient society. It is a practice that goes beyond accumulating wealth, impacting every area of life and creating opportunities for growth, security, and fulfillment. When approached with consistency and intention, saving becomes a transformative habit that empowers individuals to take control of their financial future and live a life aligned with their values and aspirations. In this sense, the act of saving is not merely investing wisely is one of the most crucial steps toward financial independence and security, and it's an art that requires both knowledge and discipline. Investing isn't merely about buying stocks, real estate, or other assets in the hope of earning returns. It's about making deliberate and informed choices that align with your financial goals, risk tolerance, and timeline. Wise investing is less about luck or quick gains and more about understanding your financial landscape, staying patient, and allowing your money to grow steadily over time. When approached thoughtfully, investing can transform a small amount of capital into substantial wealth, thanks to the power of compound interest. This power lies in the reinvestment of earnings, where the growth generated by your investments begins to earn growth of its own. It's a concept that rewards patience and consistency, encouraging a mindset that prioritizes long-term gains over short-term rewards. To invest wisely, one must first understand the different types of investment vehicles available and how they function. The stock market, for example, offers the potential for substantial returns but comes with inherent risks. Stock prices fluctuate based on factors like company performance, economic conditions, and investor sentiment. Those who invest in stocks should be prepared for volatility, understanding that values will rise and fall, sometimes sharply. However, historical data shows that the stock market tends to grow over time, making it an attractive option for those with a long-term outlook. Investing in stocks requires research and an understanding of the industries or companies in which you're investing. A wise investor doesn't simply pick stocks based on trends or recommendations. They analyze the company's financial health, market position, and growth potential. This approach allows them to make informed decisions rather than gambling on speculative opportunities that may look enticing but carry a high risk of loss. Bonds represent another popular investment vehicle, generally considered safer than stocks. When you buy a bond, you're essentially lending money to a government or corporation, and in return you receive interest payments along with the principal amount when the bond matures. Bonds are typically less volatile than stocks, offering stability and predictable returns. This makes them appealing to conservative investors or those nearing retirement, who may prioritize preservation of capital over aggressive growth. Though bonds generally offer lower returns compared to stocks, they serve as an excellent way to diversify a portfolio, reducing overall risk while still contributing to growth. Wise investing often means creating a balance between high-risk, high-reward assets like stocks and safer, more stable investments like bonds. Real estate is another valuable component of a wise investment strategy. Real estate investing can take various forms, from purchasing rental properties to investing in real estate investment trusts (REITs). Rental properties can provide both regular income through rental payments and long-term appreciation in property value. However, managing rental properties requires effort and sometimes substantial expenses, including maintenance, taxes, and potential vacancies. REITs offer a more hands-off way to invest in real estate, allowing you to own shares in companies that operate income-producing properties. Real estate investments can hedge against inflation, as property values and rental income generally increase over time. However, like all investments, real estate requires due diligence. A wise investor evaluates location, property condition, market trends, and potential income to make informed decisions. Real estate can be a powerful addition to a diversified portfolio, offering both income and the potential for appreciation. Mutual funds and exchange-traded funds (ETFs) are investment vehicles that pool money from many investors to buy a diversified portfolio of stocks, bonds, or other assets. These funds offer instant diversification, reducing risk compared to investing in individual stocks or bonds. Mutual funds are actively managed by professionals who make decisions about the fund's holdings based on research and market analysis. ETFs, on the other hand, are typically passively managed, aiming to replicate the performance of a specific index. Both mutual funds and ETFs can be wise choices for investors who prefer a hands-off approach, allowing them to benefit from diversification and professional management. However, fees associated with mutual funds can eat into returns, especially with actively managed funds. Wise investors pay close attention to these fees, selecting funds that align with their goals while minimizing unnecessary expenses. When investing wisely, diversification is a critical concept. It involves spreading investments across different asset classes, industries, and geographical locations to minimize risk. A diversified portfolio helps to cushion against market volatility, as losses in one area can be offset by gains in another. For example, an investor who holds a mix of stocks, bonds, and real estate is less vulnerable to market downturns than someone with all their money in a single asset class. Diversification does not guarantee a profit or protect against loss, but it can help to reduce the impact of market swings and create a more stable return over time. By building a well-rounded portfolio, a wise investor can take advantage of various growth opportunities while limiting exposure to any single risk factor. Timing is another essential aspect of investing wisely. The market moves in cycles, and trying to time these cycles perfectly is nearly impossible, even for experts. Rather than attempting to buy at the lowest point and sell at the highest, a wise investor focuses on consistency, investing regularly over time, regardless of market conditions. This strategy, known as dollar-cost averaging, involves investing a fixed amount at regular intervals. The dollar-cost averaging smooths out the effects of market volatility, as you buy more shares when prices are low and fewer shares when prices are high. This approach helps to reduce the emotional impact of market fluctuations, as you're not focused on short-term gains or losses. Consistent investing builds wealth steadily, capitalizing on long-term growth without being swayed by temporary market trends. One of the keys to wise investing is understanding your risk tolerance. Every individual has a different capacity for handling risk, and it's crucial to know your own comfort level before making investment decisions. Younger investors often have a higher risk tolerance, as they have more time to recover from market downturns, while those nearing retirement may prefer conservative investments that protect their wealth. Investing beyond one's risk tolerance can lead to panic during market downturns, resulting in impulsive decisions that may lead to losses. A wise investor takes the time to assess their risk tolerance, ensuring their portfolio aligns with their comfort level and long-term objectives. This approach allows them to stay calm and focused even during periods of market volatility. Tax efficiency is another important consideration in wise investing. Taxes can take a significant portion of your investment returns, so it's beneficial to structure your investments in a way that minimizes tax liability. Tax-advantaged accounts, such as individual retirement accounts IRAs and 401ks, offer opportunities for tax-deferred or tax-free growth, making them ideal for long-term investments. For example, contributions to a traditional IRA are tax-deductible, while investments grow tax-deferred until retirement. A Roth IRA, on the other hand, offers tax-free withdrawals in retirement, as contributions are made with after-tax dollars. Understanding the tax implications of various investment accounts can enhance returns over time. By prioritizing tax-efficient investments, a wise investor ensures that more of their money stays invested, compounding and growing over the years. Patience is perhaps one of the most overlooked virtues in wise investing. The lure of quick gains can be tempting, especially with the abundance of information and market speculation readily available today. However, wealth is rarely built overnight, and true success in investing requires a long-term perspective. A wise investor understands that the market will have ups and downs, and they don't let short-term fluctuations dictate their decisions. They remain committed to their strategy, confident that time is their greatest ally. This patient approach allows them to benefit from compound growth, which rewards those who stay invested and avoid the pitfalls of impulsive buying and selling. By focusing on long-term goals, a wise investor can ride out the highs and lows of the market, ultimately achieving a greater level of financial security. Emotions can be a significant obstacle to wise investing. Fear and greed often drive people to make hasty decisions that are not in their best interest. During market downturns, fear can lead to panic selling, locking in losses and missing out on future gains. In contrast, greed can cause people to chase hot stocks or trends without adequate research, increasing the risk of loss. A wise investor practices emotional discipline, resisting the urge to react impulsively to market movements. They recognize that successful investing is based on strategy, not emotion, and they stick to their plan even when the market becomes turbulent. By keeping emotions in check, a wise investor avoids the costly mistakes that can derail long-term goals. A wise investor also invests in themselves, continuously expanding their financial knowledge. The world of investing is complex and ever-evolving, and staying informed about economic trends, market developments, and investment strategies can lead to better decision-making. Reading books, attending seminars, and seeking guidance from financial professionals are ways to deepen one's understanding of the market. By committing to lifelong learning, a wise investor gains the confidence to make informed choices, adapting their strategy as needed to align with changing goals and circumstances. This dedication to self-improvement not only enhances financial success, but also fosters a sense of empowerment and control over one's financial future. Investing wisely requires a balanced approach, blending knowledge, patience, and discipline. It's about creating a plan that aligns with your financial goals, carefully selecting investments, and remaining consistent over time. Wise investing is not a get-rich-quick scheme, it's a journey that requires a steady commitment and a long-term vision. By understanding the fundamentals, practicing emotional discipline, and continually learning, a wise investor builds a solid foundation for lasting financial security. This approach paves the way for wealth accumulation, not through luck or shortcuts, but through deliberate, informed, and mindful choices that stand the test of time. To give generously is to embrace a spirit of selflessness, to seek the good of others, and to invest in the well-being of society as a whole. Giving, in its essence, extends beyond the transaction of money or tangible items. It speaks to an attitude, a value system, and a belief in the power of collective upliftment. It is a mindset that allows us to make a meaningful difference in others' lives. Generosity is about creating connections and a sense of shared humanity. When we give, we acknowledge others' experiences, challenges, and struggles, which may differ vastly from our own. This awareness fosters empathy, as we recognize that others' needs and dreams are as valid as ours. Generosity pushes us out of our comfort zones and compels us to understand the world from perspectives beyond our own. Moreover, generosity is not confined to financial giving. While financial donations have a profound impact, generosity also encompasses the sharing of our time, skills, knowledge, and emotional support. Volunteering for community service, mentoring someone who could benefit from our guidance, or even offering a listening ear to someone going through a tough time, are all forms of giving. Generosity has a transformative impact on both the giver and the receiver. For those who give, it often brings a sense of fulfillment, joy, and a deeper sense of purpose. Studies have shown that generous actions can lead to increased happiness, reduced stress, and improved overall well-being. The act of giving activates pleasure centers in the brain, which may explain why we often feel so good when we help others. Beyond individual satisfaction, giving generously fosters a sense of connection with others, reminding us that we are part of a larger community, each capable of contributing positively to the world. Generosity, however, is not simply an altruistic act that benefits others, it has profound benefits for society as a whole. Communities characterized by generosity tend to exhibit higher levels of social cohesion, trust, and cooperation. When individuals and organizations give generously, it strengthens the fabric of society by promoting a culture of reciprocity, where people are more likely to help one another in times of need. This creates a positive ripple effect, where acts of generosity inspire others to follow suit, leading to a society where people actively look out for one another. The practice of generosity has a profound impact on relationships as well. Acts of giving foster trust, mutual respect, and loyalty, which are essential for building strong, healthy relationships. When we give without expecting anything in return, it shows others that we value them for who they are, not for what they can offer us. This selflessness can deepen bonds and foster a greater sense of emotional connection. In romantic relationships, friendships, family dynamics, and professional settings, generosity cultivates a supportive environment where people feel valued and appreciated. Generosity also has the potential to drive positive change on a larger scale. Many social issues, from poverty and homelessness to lack of access to quality education, can be alleviated through generous acts. When people come together to give, whether it's through philanthropy, advocacy, or volunteerism, they can make a significant difference in the lives of those who are less fortunate. Charitable organizations, nonprofits, and community initiatives rely on the generosity of individuals and businesses to provide essential services, raise awareness, and enact lasting change. Through these efforts, we witness the power of collective giving in addressing systemic issues and building a better, more equitable world. Moreover, generosity can inspire others to give as well, creating a cycle of positivity and kindness. When we see others giving generously, it often motivates us to do the same. This ripple effect can lead to a culture of giving, where people are encouraged to contribute to the welfare of others. In communities where generosity is valued and celebrated, people are more likely to come together to support one another, whether it's through organizing community events, raising funds for a local cause, or simply looking out for neighbors in times of need. This culture of generosity strengthens community bonds and fosters a sense of belonging, reminding us that we are all interconnected. Generosity also fosters gratitude, both in the giver and the receiver. When we give, we are often reminded of our own blessings and privileges, which can foster a sense of gratitude. This awareness can lead to a more positive outlook on life, as we recognize and appreciate the good things we have. On the other hand, the receiver of a generous act is often filled with gratitude for the kindness shown to them. This gratitude can inspire them to give back in their own way, creating a chain of goodwill that extends far beyond the initial act. In a world that often emphasizes material wealth and personal success, generosity serves as a reminder of the importance of human connection and compassion. It challenges the notion that happiness and fulfillment come solely from accumulating wealth or achieving individual goals. Generosity shows us that true satisfaction often comes from helping others and making a positive impact on their lives. It reminds us that we are part of something greater than ourselves and that we have a role to play in creating a more compassionate and just world. Furthermore, generosity can be a powerful antidote to the loneliness and isolation that many people feel in modern society. In a world where people are often disconnected from one another, giving can serve as a bridge, bringing people together and fostering a sense of community. When we give our time, resources, or support to others, we create connections that might not have existed otherwise. These connections can provide a sense of belonging and purpose, reminding us that we are not alone and that we have the power to make a difference in the lives of others. In the workplace, generosity can lead to a more positive and productive environment. When employees and leaders practice generosity, whether it's through offering help, sharing knowledge, or recognizing others' efforts, it creates a culture of support and collaboration. This culture can lead to increased morale, better teamwork, and greater job satisfaction. Generosity in the workplace also promotes a sense of loyalty and trust, as employees feel valued and supported. This can lead to greater productivity and success for the organization as a whole, as people are more likely to go above and beyond when they feel appreciated and respected. Generosity is also essential for fostering creativity and innovation. When people are willing to share their ideas, resources, and expertise, it opens up new possibilities and opportunities for growth. In environments where generosity is encouraged, people are more likely to take risks, collaborate, and think outside the box. This can lead to the development of new ideas, products, and solutions that benefit not only the individuals involved but society as a whole. Generosity, in this sense, fuels progress and drives positive change as people work together to create something greater than they could achieve alone. Moreover, generosity can have a positive impact on mental health. Acts of giving have been shown to reduce stress, increase feelings of happiness, and promote a sense of purpose. When we focus on helping others, it can shift our attention away from our own worries and concerns, providing a sense of relief and perspective. Giving can also boost our self-esteem and sense of self-worth, as we see the positive impact we can have on others. For those struggling with mental health challenges, acts of generosity can provide a sense of hope and connection, reminding them that they have something valuable to offer. Generosity also plays a crucial role in building resilience. When we give, we often face challenges and obstacles, whether it's finding the time to volunteer, sacrificing personal resources, or stepping out of our comfort zones. These challenges can help us develop resilience, as we learn to navigate difficulties in the pursuit of a greater good. Generosity teaches us to persevere, to push through discomfort, and to remain committed to our values, even when it's not easy. This resilience can serve us well in other areas of life, as we develop the strength and determination to overcome challenges and pursue our goals. In addition, generosity fosters a sense of hope. In a world that can sometimes feel overwhelming and filled with negativity, acts of generosity remind us that there is goodness and kindness in humanity. They show us that, even in the face of adversity, people are capable of compassion and selflessness. This sense of hope can be a powerful motivator, inspiring us to continue giving and making a difference. It reminds us that, no matter how challenging the world may seem, we have the power to create positive change and to contribute to a better future. Generosity is a timeless and universal value, one that transcends cultural, religious, and societal boundaries. People from all walks of life across all cultures and beliefs recognize the importance of giving. It is a value that unites us as human beings, reminding us of our shared humanity and our collective responsibility to care for one another. In practicing generosity, we honor this responsibility and contribute to a world that is more compassionate, just, and connected. To give generously is to embrace a way of life that prioritizes compassion, empathy, and the well-being of others. It is an investment in the future, in the belief that our actions, no matter how small, can make a meaningful difference. Generosity allows us to transcend the limitations of our individual lives, connecting us to a larger purpose and a greater good. It is a reminder that in giving we receive, and that in seeking to uplift others we ultimately uplift ourselves. Through generosity we create a legacy of kindness, a foundation Planning for the long term is a principle of financial and personal growth that calls for both vision and foresight. It's about making choices today that will support and enhance your future self, and it requires discipline, patience, and a clear understanding of where you want to go. Many people focus solely on immediate needs, working hard to keep up with current expenses and short-term goals, yet they overlook the potential power of a long-term plan. Long-term planning offers a roadmap, providing direction and helping you avoid distractions and pitfalls. By looking beyond the present and visualizing where you want to be in 5, 10, or 20 years, you begin to make decisions with purpose, aligning your daily choices with a greater vision. Planning for the long term isn't only about finances, it encompasses every aspect of life, from career and health to relationships and personal development. It's a strategy that brings a sense of clarity and security, anchoring you in your values and guiding you through life's inevitable uncertainties. Long-term planning starts with setting clear, concrete goals. These goals serve as a foundation, shaping your choices and helping you stay focused amidst distractions. Without a clear vision, you may find yourself drifting, reacting to life's circumstances rather than proactively shaping your own path. Goal setting provides a direction and helps you break down large, seemingly distant dreams into actionable steps. For instance, if you aspire to retire comfortably, it's not enough to simply wish for it. You need a plan that considers how much you'll need to save, invest, and grow your wealth over time. Likewise, if your long-term vision includes owning a business, writing a book, or traveling extensively, setting measurable goals today is essential. Long-term planning gives you a map for achieving these goals, offering a way to measure progress, adjust strategies, and stay committed. By establishing benchmarks along the way, you're able to celebrate small victories, which in turn builds momentum and keeps you motivated on your journey. Financially, planning for the long term means making choices that secure your future, often by building wealth through disciplined saving and investing. The concept of compound interest underscores the value of starting early. Even modest contributions to savings or investments can grow significantly over time, when given enough time to compound. For example, someone who begins investing in their 20s, even with small amounts, can often amass more wealth by retirement than someone who starts later with larger amounts. Compounding rewards those who are patient, who are willing to think beyond immediate rewards and focus on the bigger picture. It's about committing to a strategy that aligns with your goals and staying consistent, even when it seems slow. Long-term financial planning also allows for diversification, helping you spread risk and reduce vulnerability to market fluctuations. This means not only relying on traditional savings accounts but also exploring other investment vehicles like stocks, bonds, real estate, or retirement funds. The key is to invest with a sense of patience and prudence, remembering that the goal is gradual growth, not overnight wealth. In terms of personal development, planning for the long term helps you prioritize education, skills, and experiences that will benefit you in the future. Lifelong learning is essential to both personal satisfaction and career advancement. As the world changes, so do the skills and knowledge required to succeed, and those who invest in their growth stay ahead of the curve. By identifying areas for growth early on, you can build a strong foundation that enables you to adapt to changing circumstances. For instance, if you envision yourself as a leader in your industry, continuous learning and skill building in areas like communication, management, and technical expertise become essential. The earlier you start, the stronger and more versatile you become, making it easier to navigate future challenges with confidence and competence. A long-term perspective allows you to invest in yourself consistently, building knowledge, confidence, and resilience that will serve you in every area of life. In the realm of relationships, long-term planning involves cultivating and nurturing connections that bring meaning and support to your life. Building strong relationships takes time, effort, and intention. By investing in relationships that align with your values and goals, you create a support network that enhances your well-being. Friendships, family relationships, mentorships, and professional connections all play a vital role in personal growth and fulfillment. When you plan for the long term, you recognize the importance of choosing people who uplift and encourage you, who help you become a better version of yourself, and who stand by you in times of change or adversity. This perspective encourages you to prioritize relationships that are mutually beneficial, based on respect, trust, and shared values. Over time, these relationships grow deeper and more rewarding, providing emotional, social, and even professional support that enhances your life. Long-term health planning is another crucial aspect of building a fulfilling life. Our bodies and minds are invaluable assets, and without proper care, other areas of life can quickly be affected. Investing in your health early on through balanced nutrition, regular exercise, mental wellness practices, and preventative care lays the groundwork for a higher quality of life as you age. Health is often taken for granted until it begins to decline, but with a long-term mindset, you can establish habits that help you stay physically and mentally vibrant for years to come. By approaching health with foresight, you create a lifestyle that supports not only your present well-being but also enhances your ability to enjoy the future. Regular checkups, a balanced diet, consistent physical activity, and stress management practices are all ways to build a health foundation. The sooner these habits are established, the greater the benefits as they compound over time, contributing to longevity and a life full of energy and vitality. A long-term perspective also helps you navigate life's inevitable ups and downs with a sense of purpose. Knowing that temporary setbacks are part of a larger journey can help you remain resilient, allowing you to stay focused on your ultimate goals rather than getting discouraged by short-term challenges. By planning for the long term, you recognize that life is a marathon, not a sprint, and that true success comes from consistent effort, adaptation, and perseverance. Challenges, failures, and unexpected changes become opportunities for learning and growth, as each experience brings valuable insights that contribute to your overall progress. With a clear vision, you're able to bounce back from setbacks more easily, knowing that they're just one part of your journey, not the end of it. Additionally, long-term planning brings a sense of stability and security to life. When you know where you're headed, you're less likely to feel overwhelmed or anxious about the future. This peace of mind allows you to be more present and focused on the present moment, knowing that you're actively working towards a meaningful future. Planning for the long term reduces impulsive decisions and emotional spending, as you're guided by your values and goals rather than by temporary desires or external pressures. Instead of reacting to every change or new trend, you're able to evaluate choices against the backdrop of your larger vision, making decisions that truly serve you. This approach encourages you to prioritize needs over wants, and to allocate resources in a way that supports your long-term vision. Planning for the long term requires patience and a willingness to delay gratification. This can be challenging in a world that emphasizes instant results and quick rewards, but it's a discipline that pays dividends over time. Delayed gratification involves sacrificing small pleasures now to achieve greater rewards in the future. It's about resisting the urge for immediate comfort or convenience in favor of choices that lead to lasting fulfillment. For example, choosing to save for a down payment on a home rather than spending on a luxury item may seem difficult in the short term, but it brings long-term security and satisfaction. Practicing patience and learning to wait for meaningful rewards strengthens your character and prepares you for more significant accomplishments. Each time you choose the long-term reward over the short term, you build resilience, reinforcing your commitment to your goals. Long-term planning also allows for a more balanced and fulfilling life. When you have a roadmap, you're able to make room for all aspects of life: career, health, relationships, personal interests, rather than letting one area dominate at the expense of others. This holistic approach prevents burnout and encourages a well-rounded life, where each area supports and enhances the others. For example, career success is more fulfilling when balanced with health and meaningful relationships, as all contribute to overall happiness and well-being. A long-term perspective helps you allocate time, energy, and resources across these areas, creating a lifestyle that's not only productive but also deeply satisfying. You're better able to enjoy your achievements when they're part of a balanced, intentional life, rather than being overshadowed by stress or neglect in other areas. Long-term planning also fosters a sense of responsibility and ownership. When you set goals for the future, you take responsibility for your own success and happiness, recognizing that your choices today directly impact your outcomes tomorrow. This sense of ownership empowers you to take control of your life, making proactive decisions rather than passively accepting whatever comes your way. It's a shift from a reactive to a proactive mindset, where you're actively working towards a future that aligns with your values and aspirations. By taking ownership of your long-term vision, you strengthen your resolve, build self-confidence, and cultivate a deep sense of purpose. Each step you take, each decision you make, brings you closer to the life you envision, reinforcing your commitment and inspiring you to keep moving forward. Planning for the long term is an investment in a life that is purposeful, stable, and rewarding. It allows you to create a future that reflects your values and goals, one that's built on a foundation of thoughtful decisions and consistent effort. Long-term planning is about more than achieving success. It's about crafting a life that's meaningful, fulfilling, and sustainable. It's a journey that requires patience, but the rewards are well worth the effort, offering a sense of direction and a roadmap to a life of genuine satisfaction.